The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Tom's out this morning. He will be doing his show live this afternoon, checking in on the markets. We got the S&Ps in positive territory, up by about 8 points at 3403. We got the NASDAQ slipping into the negative right now. You got the NASDAQ actually positive by 20 points, 11,210. NASDAQ 100 into the negative by 23 points, 11,428. The Dow up 82 points right now, trading 27,987. The Russell up about 0.9%. Russell trading at up 13 points at 1549. We got gold up $6 at 1972. Oil catching a bid up $1.30 at 39.58. And we got notes and bonds right now, a little bit of higher price and lower yield. The 10-year right now up 2 ticks at 139.18. The 30-year up 11 ticks. We got the 10-year yield sitting right at 0.67%. And we got a lot of action today, folks. We'll start off with retail sales. I just talked about it in the update. Purchases rising 0.6% from the month prior. When you get into the core number, though, a little dicey as that number falling 0.1%. Also missing forecast. The estimation for the headline number was a full percent. The core number, often considered, as they say in the Bloomberg article I got up here, are more reflective of underlying consumer demand, because that doesn't consider gasoline prices in there, car dealers, food services. Nonetheless, that number out at 8:30, market with a little bit of downside volatility. And what else we got? We got a Fed meeting. We got an announcement at 2 p.m. We got a press conference at 2:30, the last Fed meeting before the presidential election. And with all that, folks, let's jump over to our man Kevin Hinks from TD Ameritrade, Thinkorswim. Folks, every day after our program, 11 o'clock, Fast Market. Kevin Hinks, Alex Coffey, the whole team at TD Ameritrade Network. You want to talk about defined risk options? Check it out, folks. Great program, especially we got earnings. You got FedEx rocking today. You got Adobe slipping into the negative after some pretty strong numbers as well. Kevin Hinks, good morning.
Good morning, Tommy. How are you? This retail sales data is interesting because there's a bigger picture here, Tommy. We've had really good run of economic data the last 2.5 weeks. You can make the case since the non-farm payroll number came out.
Sure.
So what happens when economic data starts to beat on a daily basis? Well, the consensus expectations start to go up. So if you look at these numbers, today's retail sales numbers, without looking at what the expectations were, they're not bad numbers. The
Sure.
expectations were higher, though, for that number. That's why that number is disappointing. And the revisions to last month are all lower. But the revisions to last month, if you take that number, still a pretty solid number on retail sales. So this is a number that you look at. And what I do is, if I'm not sure how to interpret data like retail sales, watch what the futures do. Put up the 1-day, 1-minute chart in the futures on the Thinkorswim platform and watch how they react to these numbers. And watch minute by minute how the futures react. And the futures dipped a little bit because these numbers didn't meet expectations, but they're sort of holding. And now they've consumed and digested all this information. And I think now this entire market, Tommy, is waiting for not necessarily 2 o'clock when the announcement's made, because no one expects any real announcement on interest rates. But what they do expect and what they do anticipate is Jerome Powell's comments at 2:30 Eastern time. That's what I think will be the market-moving trade of the day, his comments, Tommy.
It's pretty cool when we usually get these Fed events, right, Kevin? You might get a little bit of action during the day now, especially when we have retail sales coming out. But by maybe by right now, man, you might see some calmness creep into the market, as just like you're talking about. We wait for the announcement at 2 o'clock, but pretty much assured rates are going to be low, folks. They're going to be low for a long period of time. And then we get the press conference at 2:30. Pretty interesting. Last press conference before the presidential election. It's almost, in my opinion at least, assured that you're not going to see anything spectacular when you have a presidential election less than 50 days out. And the S&Ps, like you talked about, Kevin, I mean, yeah, a little bit of a miss, but I got green across the board right now on my Thinkorswim platform. I got the S&Ps up 11 points. I got the NASDAQ 100 basically flat, the Dow up 95, the Russell's up a full percent right now, and we're sitting in the S&Ps at 3406, which is basically just above the levels that we were at pre-COVID back in February, early March. So tough to argue, with some negative data potentially, but a lot of expectations to the upside. Hey, how about two of the companies with earnings last night, right? FedEx crushing it out of the park, trading higher today. Up about 7%. I mean, it makes sense. They got some strong deliveries, of course, delivering for all of the retail sector. But Adobe as well, man. Adobe turning negative, actually, on the open after trading to 522 last night. We're down to 490, down 1% on their numbers. Pretty interesting as this earnings season kind of wraps up.
Yeah, Tommy, isn't it interesting that we're having a discussion about retail sales and the health of the overall economy when we're looking at FedEx up 7.25%, up $17. And what is FedEx really involved in every single way, right? The last mile to your home in retail shopping, and there may be no better indication of what this economy is doing than that retail sales number combined with the quarterly results from FedEx showing a just an excellent take on what the overall economy is doing. So, yeah, it's kind of the market gives you information, right? And the market tells you how healthy it is over time. And FedEx was hurt a year ago by the trade war and lack of overall international business between, the U.S. and other countries. But now it is on a pretty strong run here in a pretty comeback with higher prices coming into Christmas shopping season. So pretty strong momentum here in FedEx, that's for sure.
I mean, it's pretty remarkable, FedEx especially. You closed out yesterday at about 236, but we were trading, Kevin, with a 169 handle as recently as last month, and you just traded up to almost 260 on FedEx. And some of these companies, like you talked about, some strong numbers across the board. You could say that a lot of great expectations really priced into that equity coming in. I mean, this thing's been, I got it up on the Thinkorswim platform, basically a rocket ship. Basically since about June 30th, you were at 130. We've doubled that price right now. And you've basically been a rocket ship. And still, the stock's up about 7% today as they crushed it on revenue. They crushed it on earnings. So with everything going on today, Kevin, what are you guys going to be talking about on the program?
What a better day than a day like this to talk about gambling. We're talking about DraftKings. We're talking about overall online gambling habits. And that's what we're going to do today. It's the end of earnings season, Tommy. Names get a little thin. So we try to do themes and really current event themes. And today, online gambling, Penn National Trading, and DraftKings today.
Talk about some accelerations. I saw the headline today. I think it's the Giants, right? That they're going to be the partner with DraftKings, man, as that gambling sector really takes shape. Folks, right after this program, Fast Market. Kevin, we appreciate it, man. We look forward to the program. We look forward to talking to you tomorrow.
Thanks for having me on, Tommy.
Thanks, Kevin. We'll
if
be right
you're
back,
not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We get the S&P is up by about 6 points right now, sitting at about 3401. NASDAQ 100 slipping a bit. We're going to jump around to some of those FANG stocks. So Amazon out there with the headline this morning, they're going to be building 1,000 warehouses, kind of a smaller version of their warehouses in suburban areas of the country. They're trying to compete with Walmart in terms of same-day delivery. Amazon down about 0.7% this morning, trading at 31.33. You had opened a bit higher at about 31.75, trading off a bit. Some of the FANG stocks in particular, you got Microsoft trading lower as well, down about 0.5%. Jumping over to Apple shares, down 1%. Apple with their event yesterday, talking about the iWatch, some of the health features there. Pretty interesting when you look at Apple. The intraday kind of high, I mean, it opened at a high, but you look where we were, folks, 1 o'clock exactly. Guess what time that Apple event started at yesterday? 1 o'clock Eastern time, and you sold off from about 118 to under 114 at one point, and we're back approaching the lows that we had for Apple shares yesterday, trading at 114.35. All right, what else we have happening in the market? JP Morgan, they're talking about this morning that they could see a potential $200 billion possibly flowing out of stocks this quarter. Now, $200 billion, that's a pretty staggering number, right? But when you put it in context, in my opinion, just the moves that we're getting in Apple alone, folks. We're down 1% in Apple. Okay, it's a $2 trillion company. Well, guess what, folks? You're talking about billions of dollars immediately. What's that, $20 billion is 1%? Would that make sense? 20 billion, 200 billion? Yeah, that's $20 billion of market cap that just got erased in Apple in a heartbeat. So when you talk about 200 billion, not the end of the world, but not what you want to hear when really it might be one of the biggest withdrawals. Pensions and sovereign wealth funds are set to offload about 200 billion of equities as they rebalance their portfolios, posing a risk for global shares, according to JP Morgan. This would be the most negative quarterly adjustment since the pandemic hit. Now, I mean, this is where, some of these stories, the most negative quarterly adjustment since the pandemic hit. What are we, 2 quarters into the pandemic, maybe 3, okay? But nonetheless, not what you want to see in terms of pensions and sovereign funds taking some money out of the market. But still, for some context, as I was just talking about with Kevin Hinks, the market, yeah, you could say a bit of a miss. We're sitting basically, folks, right at where we were from pre-COVID levels. There's your high, 33.9750. We've gotten it all back. We're trading at 34.02. Now, you can make the argument, of course, and I would make the argument, the market is not indicative of the economy. In terms of continuing claims last week, we're actually up, continuing jobless claims. We get that number tomorrow at 8:30 in the morning, but continuing claims actually increasing last week. We're still getting initial jobless claims to the tune of about 800 and 900,000 on a weekly basis, but the market clawing it all back. Retail sales numbers this morning, pretty decent, and the market digesting that. And now what's next on the ratings? We got Chairman Powell, 2 p.m. Eastern time, as we await what he has to say. So this is the last Fed meeting before the election. Now, the Fed has a history of not doing anything, really anything, as you lead up to the presidential election, trying to avoid politics. They've already said everything that they're basically going to do. All right, they're going to have interest rates low through 2023. It's all but assured, and I say that almost to be kind. It's not happening, folks. Interest rates, they're staying at 0. They're staying at 0 right now. They're staying at 0 for the foreseeable future. What will get interesting is I'm sure Chairman Powell will get asked about retail sales this morning, not quite living up to expectations. When you get into the core number, okay, now core number, which excludes food services, car dealers, building material stores, and gasoline falling 0.1%. That is a much more reflective number of consumer demand, okay, because gas, you're going to see some fluctuations in gases, car dealers, food services. But when you talk about consumers, buying goods, a consumer-driven economy, which we definitely are, falling 0.1%. You see where we are on the graph. Retail sales increasing less than forecast in August after a revision lower. I mean, we had a huge pop in May, 18.3%. That was coming off the huge drops in March and April. June, you continue that trend, but July and August now pulling back. July, you were revised down to 0.9. August coming in at 0.6, pretty stagnant numbers, as basically we wait for any type of a vaccine to get over this COVID pandemic. All right, we got crude numbers coming out right after this next break. Crude catching a little bit of a pop. You see this number the last 2 days. We trade lower. Starting on September 1st from 43.20, you make a low of about $37. Tick around that level for about 3 or 4 or 5 days. Pretty interesting when you look at how this number continues to navigate right back to $40 or $41, which is the low, okay, of March 6th. Now, March 6th, we were already in the pandemic. Markets were already escalating lower. You bring things back. March 23rd about was the lows of the stock indices, okay? This was the weekend from March 6th to March 9th that you had the Saudis come out and completely reprice oil, really putting the pressure on the prices. And you had oil from basically, now this is a daily chart, on March 6th, you were trading at $46. And fast forward, this is when the slide really began. March 9th, you trade down to 27. This is the continuing contract, okay? But when you were talking about oil, as we all remember, I'm sure, you had oil actually trading to negative prices. On this graph, we're showing $6.50 the low. But really, since June 8th, okay, so we're talking about almost 3.5 months, we've been dealing with a pretty consistent, stable price of oil, somewhere around $40. You have oil trading back up to that level right now, putting this back on a 15-minute for the price of crude. Now you see the acceleration. Early yesterday, you're trading just above $37. We're now up a solid, call it $2.60 from that price tag, with crude trading at $39.50. All right, jumping around to the gold contract. Gold, a little bit of volatility this morning on their numbers as well. You got gold trading at $19.68, did make it as high as $19.83.80 at one point. Silver down about 9 cents at $27.37. And checking out notes and bonds, pulling back a bit right on the open. That is about 9 o'clock. Really fast forward, there's 9:30. We were at 139.20. We've ticked off a few ticks. And realistically, folks, as we were talking about with Kevin, you're going to see a calm market, whether it's inching forward to 11 o'clock, noon. Once we get near that 2 o'clock range, you're going to see market participants really just wait in anticipation of whether it's the announcement. But I agree with Kevin, as he said again, all but assured, we know what the announcement's going to say. 0% interest rates, they're going to be there for a while. What's always a little bit of a wild card, and to Chairman Powell's credit, he does a great job of navigating those press conferences. He doesn't get caught up in saying anything he doesn't want to say. He's pretty forthright, and he's been pretty forthright. The only thing that'll be especially interesting is just coming off the heels of kind of their new inflation policy, being a little bit more okay with potentially inflation climbing above that 2% mark. They still got a 2% goal in the long run, but being a little bit more okay with maybe climbing above that level a little bit, as their real fear here is getting that economy going. We got almost 14 million people on continuing claims. We're dealing with initial claims, as I said, to the tune of about 800,000 or 900,000. Retail sales potentially slowing a bit, but nonetheless, folks, we're sitting with an S&P right at 3,400. Checking out the VIX as we come into this break, and we'll have those oil numbers right after this break. The VIX trading at 2630 from a 24.92 handle yesterday, and we got to 24 briefly early this morning as well. Stay tuned, folks. We'll be right back in 3 minutes. We'll have those oil numbers.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The S&P is now trading at about 3,400, hanging right where we were. We might get a calm market right from now to the next about 4 hours, waiting for that press conference at 2:30 p.m. Eastern time. Jumping over to Amazon. So as I mentioned, Amazon, they're opening 1,000 warehouses is their plan. Jumping over to the headline for them. There you go, 1,000 warehouses in suburban neighborhoods. One of the neighborhoods mentioned, Holyoke, Massachusetts, close to my hometown of Boston. The big deal here, folks, yesterday, not a coincidence that this news coming out today. Yesterday, Walmart Plus launching their service, $98 a year, same-day delivery. All you got to do is order $35 worth of goods, same-day delivery, completely free. You're going to have gas discounts in there along with other perks. So they're talking about that they're going to be building these kind of small warehouses in suburban areas. One of the recently opened warehouses, there it is, Holyoke, Massachusetts, exemplifies Amazon's answer to the existing challenge, located not far from a once vibrant mall, just a short drive from more than 600,000 people. They got to compete with same-day delivery. Walmart has that ability with brick and mortar already throughout the entire country. All right, and Amazon, you can see building out their brick and mortar presence as they got to compete with that same way, in the same way. Interesting to see how that shakes out. Amazon, quite a juggernaut for sure. All right, other stories out there. Home builder optimism hitting a record high, fueled by low mortgage rates. The index surges to the highest level in 35 years. Not bad, folks. Not bad at all. That number, so a gauge of builder sentiment, jumped 5 points from a month earlier to 83, beating estimates and hitting the highest level in 35 years. According to the National Association of Home Builders, it was at 78 last month, which matched the previous record from 1998. Now, it's interesting. I'm going to jump around a little bit here. We got stocks making moves. I'm going to jump down to KB Homes. So they got an upgrade this morning to outperform, noting that amidst rising fear and insecurity, the instinct to retreat to the sanctuary of one's home is implacable. Implacable? Irreplaceable? Either way. I know it doesn't say irreplaceable, but implacable? Implaceable? Maybe. Nonetheless, KBH is their symbol. You see the pop there, up about 4% this morning. Now you had Lennar out with their numbers earlier in the week. Check it out, folks. I mean, that's trading higher on that number, right? Lennar up to 79. Lennar had strong numbers on Monday after the bell. They traded lower. You saw some big-time volatility on Tuesday on the opening bell. They actually had their conference call yesterday at about 10 a.m. Nonetheless, today, trading higher on that news, Lennar continuing on that home builder segment. And, folks, you want to buy a home, come buy one in Florida. It is beautiful. We got no state taxes, and I'm a little bit biased, as I know my dad is as well. But, man, it is a beautiful place to be when you don't got to be working in the cities anymore. So, jumping around, we talked about Fast Market. After this program, they're going to be coming out talking about gambling. Pretty interesting to see here when you look at ESPN. Week 1 Monday Night Football ratings falling nearly 11%. It's quite an interesting time, folks, when you talk about football. I'm not sure what the ratings were for Sunday. I was watching Sunday, man. There is a thirst for sports right now. Very fortunate in Tampa Bay. We got the Lightning in the conference finals last night. They almost could have closed it out last night, made it into overtime, lost a thriller in double OT to make it to the finals. Nonetheless, I think they're still up 3-2 in their series. You got Tampa Bay. They got my man Tom Brady, Tampa Tom now. Tough week for him on week 1, putting a loss up there, but we'll see how that goes. In my hometown team, my number 1 team, the Patriots, starting things off with Cam Newton with a win. But nonetheless, you saw a little bit of a pullback on their numbers, attracting 10.7 million viewers. The second contest had 7.6 million. They actually have 2 different games on Monday night is what they do. The late game starts at like 10:20, I think. Yeah, and so the game peaked at about 13.1 million viewers. Now, of course, the late game, it's going to be a West Coast game. It's starting at 10:20 for East Coast. But nonetheless, you're talking about that's only about 7:20 for West Coast. The numbers are down from last year's average of 12 million viewers from Monday Night Football doubleheader, which was also a decline from the 13 million in 2008. We're just viewing content in a very different way, folks. It is very hard when you got to view this on a terrestrial TV, right? And how that competes. I mean, myself at home now, I got Rokus in every room. I'm flipping around between Netflix, Amazon Prime, and Disney Plus Disney Plus includes Hulu. It has ESPN as well, but there's a lot of competition that there didn't used to be in that arena. Checking out Disney. Speaking of Disney, up about 0.8% with the market to 132.30. We'll jump around to Netflix shares. Netflix had quite a day yesterday, trading from 485 to 495, backing off a bit. We've covered Amazon, down a bit today as well. And why not? You know what? We'll jump to some of these gaming stocks because DraftKings, I believe, so they made a deal with, and I'm going to pull it up. Yes, the New York Giants. So let's pull over this article real quick. Here's your headline, all right? You had DraftKings rising 7.5%. It is up. It's up about 7.9% now to the company. And the New York Giants announced an exclusive deal. So DraftKings and the NFL team said DraftKings will be the football team's daily fantasy and sports betting operator. Folks, there's nobody that likes to gamble like those New Yorkers out there. Maybe Boston. Boston's got some good gamble in them as well. But that was probably a sought-after partnership, and I believe that's right on the heels that they made a deal also with ESPN. Yeah, DraftKings, so you're talking about 2 days ago that they made a deal with ESPN as they'll be the online betting and daily fantasy partner with ESPN. So been a couple good days. There you see the pop on the ESPN news. There you see the pop on the Giants news. You just traded from 40 up to 52. Some of these stocks especially, you talk about some volatility, folks. You back things up. Now, DraftKings just went public, so we don't even go back to the COVID lows, but you were at about 17. You're trading at 52. Penn Gaming, who partnered with Barstool, talk about some volatility, folks. You go from $40 down to $3. All right, the world was freaking out. Sports didn't even exist. How can you make money in a gaming stock when you have no sports at all, let alone, I believe they got some racetracks in there as well, shut down. We've now gone from $3 to $70. And I agree with this one as well. Now, listen, there's a lot of optimism priced into this stock at $71, okay? But you talk about the Barstool brand. I'm not a huge fan of the Barstool brand myself, but you can't argue with the fact of the demographic they bring to the table, young males that are into sports, that are into gambling, and they're going to be the partner with Barstool Sports as they're basically an owner, a partner of them, and how they capitalize off that, off their content, etc. Penn up to about $71. DraftKings up this morning to $51.64 on their news, partnering with the Giants, partnering with ESPN. Pretty interesting that you didn't actually see that big of a pop on Disney on that deal, as Disney, they're dealing with their own woes. They got a lot to handle in terms of what they have to overcome with the parks, right? With the movie theater business, but things couldn't be going better for Disney Plus with their last earnings, over 100 million subscribers between Disney Plus, Hulu, and ESPN. Pretty remarkable action on that stock, but still below where you were pre-COVID levels. And I tell you, from living in Florida, folks, we're not going to those parks anytime soon. They're open, but they're nowhere near capacity. Still dealing with COVID, but we will get over that COVID pandemic at some point. You'll see a pop in Disney when we do. Stay tuned, folks. We're coming back with Teddy Kegstad. We're going to be talking some Forex. We'll be right back in 3 minutes.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the S&Ps up about 4 points, just sitting right at that 3,400 point mark. And folks, if you head on over to forex-trading-unlock.com, great site talking Forex. And every Wednesday, 40 past the hour, we talk to our man Teddy Kegstad talking Forex. We got a lot going on today. We got Fed Day, we got retail sales, we got some action in the dollar. Teddy Kegstad, good morning.
Good morning, Tom. It's good to see hear your voice for you guys again, and we got some nice currency things to talk about. Fed Day obviously means that it's going to be a flatliner pretty much for most of the day. The dollar was under pressure early, but now that the U.S. markets are open, we're waiting on, basically the same old story. I heard you earlier talking about the Fed, and most likely they're not going to say anything. It's right before the election and what have you, and so that's kind of a dead note. The interest rate market here is also a dead note. They're just hanging below their highs, nothing really to look for right there. There is a little bit of interesting kick though with the interest rates, and I think what we're seeing now with the sell-off in the stock market, like when we ended the show last week, I started to talk about the corn, and that was because the CRB and certain things we're heading into the end of third quarter. Okay, we have an election year coming up, and then we have in the fourth quarter we have Brexit that needs to be finished. We have trade deals between the UK and the United States that need to be finished. New trade deals between the U.S. and the EU trade zone also have to be finished, and none of that is even in the news right now. And I think that's being held back because of the election. Nobody knows what kind of take that the other side is going to actually have until they know what kind of results we have over here, so they know what they're dealing with. So remember when before the pandemic, the euro was in a $4 range basically for 12 months. The past 3 months, it's basically been a $3 range. So, and I think that what we're seeing is that we've stabilized the dollar, even though the bears have been there for the U.S. dollar. I think we've pretty much seen the extreme, like for instance, since we talked last week, the dollar has been rallying for the past few sessions, but it's actually lower than where the dollar index is actually lower than it was, or higher rather than it was last week, So yeah. I think that we're starting to see that buffering, you know what I mean, where we're not going to see extremes in the euro or the Swiss. Like take, for example, today, the pound is up significant today. The U.S. dollar yen is down significant today. They're the only movers today, okay? So now usually when the pound has a significant move one way or the other, you'll see some follow through with the Swiss and also with the euro. You're not seeing that today. You're not seeing that even at all, So, and when you look at the pound, like I said, it's actually lower versus the dollar than it was a week ago. So it's kind of like, remember I was talking about the dead cat bounce last week, in the currencies, and I think that that's coming to fruition now. And it has a lot to do with the equities too, and also, like I said, the CRB. You look at the sell-off that's going on in the S&Ps that's happened over the past few weeks, okay? So sell signals aside or what have you, forget that. You got the article you were talking about with JP Morgan. Like we've been talking about this for a month. People who bought the bounce have to be taking profits in front of the election. Why wouldn't they, for one?
Sure.
So that's where your selling pressure is coming from. Now think about all the people that never got out of the market. Right now they're sitting there with their hearts being like, oh, I can breathe again. I can breathe again. The stock market's right where it was pre-pandemic and even had made higher move highs, right? I mean, but that's a big crowd that's out there.
Oh, sure. Yeah.
Right? Well, they're the ones who are being like, oh, I hope I don't have to go through this again for another couple years, But they're always there, But then you have the ones, like I said, who bought the bounce. Who is not taking profits now in things like Tesla and all these other stocks that have had such an amazing run up right now? Why wouldn't you, especially the fund managers? You have to think that they're going to take those, And we nailed it with the divergence what was it, back in, I think, the beginning of July, where we saw that in the currencies, where that was the first part of it. And now we're starting to see it in the stock market. You're starting to see it in the CRB, elements like corn and and like gold. Look at gold and the metals. Copper's up on its highs, but gold and silver have been flatlined now basically for a month. They've stabilized, So all those bulls they're pretty much on the sidelines, the bulls and the bears, if you will, So I think that as we head, like today's a Fed day, it's a non-trading day for the currencies until after the number, and that's when the algos kick in, And speaking of algos, that's another thing that's going on too. Is I think you have a lot of guys like me that are starting to either take things off the table or start to readjust to wait for a trade, and now the machines are going to be taking over. Like there was a big run up last week in the dollar, where the bears really hammered the dollar, and the euro had a big spike rally. But literally, as soon as it happened, and you're talking like a $2 move, it just snapped right back, So, and that means that becomes a very dangerous trade. You're trading against the machines, and you can't win that war, So I think that sideways is pretty much the call. I'm not a dollar bull right now, but I find it very hard that the dollar is going to be able to get hammered over the next couple of weeks, especially because, on the interest rate component too. If you look at like the European people, they look at the Euro Bund and stuff like that as opposed to our 10-year and 30-year. Where our markets have been holding and buffering, where you can buy the dips, but they don't really dip much, and they snap back to this plateau, if you will, with the ceiling. The Euro Bund took a little dive last week, so there's a big divergence right there in the trade between the Euro Bund and the 10-year and the 30-year here. So somehow, if that starts to swing, that's going to make currencies move. So that's the reason why I think that you're seeing the pound rally versus the dollar trying to get a bounce, but the euro is not doing it. If the euro interest rates, even though they're already locked at basically zero as well, if their market is dictating higher rates, it's hard for the euro to move in the way it's trying to move against the dollar. You see what I'm saying? Like that's causing that tug of war. So I would be very leery of trying to be a euro US dollar bull right now if their interest rates start to come in play, because that interest rate spread will affect the cash. It's like I always tell people, like even when it comes to the S&Ps, like you don't look at the index or the futures so much as you look at the cash.
Definitely.
Money is where things are really at, right? And that's what I'm starting to look at, is the divergence in the cash versus the derivatives, and we're starting to see these big spreads on low volume. And that's what scares me. You got a low VIX, low volume, weird option pricing, and like what I'm saying, like you got a weird signals going off that this is it's ripe for us to have a big move, obviously coming up. Which way, I don't know, but I think right now we're in a very careful consolidation point. I wouldn't be looking for major trends right now. You know what I'm saying?
Yeah. No, it's a great point. And even the VIX, I find myself trying to, and that was a lot of great information you tied together, man, in terms of everything, for sure. And just I found myself doing some mental gymnastics and calisthenics, man, about the VIX. And I said, we're 48 or 49 days out from the election. I said, is this VIX really going to just hang out lower and the market kind of just be ready for the type of volatility that we're going to see? I mean, of course it's possible, because we're all kind of prepared for maybe an election like we've never seen before. And I would completely agree in terms of the short-term trading. If you're not taking any type of profits right now, folks, the risk versus reward estimate of things, if you're an investor and you can hold for a year or two, there's a great argument to be made of that, the world's going to come back. Everything's going to be fine. Democracy will win out no matter what. But man, oh man, you better be ready for some volatility. Teddy, thank you so much, man. That was quite a walk around to everything we have going on. You always do a great job, folks.
Thank you.
Visit Teddy, forex-trading-unlock.com. And Teddy, man, we'll get coming up to that election, and maybe we'll have the VIX and some volatility when we get back next week. We look forward to talking to you, man.
We'll find something. There's always a trade somewhere.
We sure will. We'll talk to you next week, man. Thanks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So S&P is trailing off a bit. We're still positive by about 3 points, hanging in at 33.98. We got 3 hours left until the Fed announcement, 2 p.m. Eastern time, 3.5 hours until that Fed press conference. Always an interesting event. I'll be keeping my one ear to the Fed, one ear to our man Dave White, who's live on the air for the Power Trading Hour from 2 p.m. till 3 p.m. Tom will be back with his program live at 3 o'clock as well. We got Fast Market coming up next, folks. Then, of course, live programming from there. We got the NASDAQ 100 off about 81 points. And, folks, if you haven't checked out the Tiger's Den, check it out at TFNN.com. It's right under the services. You can get a 30-day money-back guarantee, and we're going to give a shout-out to our man Duffy in the Tiger's Den, folks. His son named to the 40 under 40 for healthcare, Omada Health. Quite an achievement, talking about data. Duffy, congrats, man. Pretty awesome achievement. Got to be proud. And if there's one arena you want to be knocking it out of the park in, how about health? Pretty cool. And so congrats to Duffy, and check it out, folks. We got a ton of great contributors in the den in there talking about trading ideas. They're in there from early in the morning till late in the afternoon. Check it out on the front page of TFNN under services. All right, folks, checking in on that oil market. CL, we got crude oil trading to $39.71, hanging at about $39.40 right now. Quite the market in crude, and we await, as we got the S&Ps. Pretty interesting, right? We got the S&Ps sitting right at pre-COVID highs. We got the last Fed announcement coming out in the span of about 3 hours, and we got a presidential election less than 50 days away, folks. Get ready for some volatility in the VIX, sitting at a pretty decent 25 right now. Stay tuned, folks. We got Fast Market coming up next. They're going to be talking gaming stocks, and of course, live programming all day at TFNN.com. I appreciate you tuning in, folks. Stay tuned. We'll be right back in 3 minutes.